Vietnam's economy kept its forward momentum in May despite global uncertainties. Trade talks with Washington advanced, while a new comprehensive partnership with Thailand and President Macron's visit secured deals in aviation, defense, and energy, reinforcing Vietnam's role in global landscape. Domestically, Resolution 68 was issued by the Politburo, placing the private sector central growth pillar by 3-year tax exemption for new SMEs and 30% cut in regulatory costs, all aimed at achieving 10 to 12% annual private sector growth by 2030. Retail sales rose 9.7% year-on-year as holiday spending and a 21% jump in international visitor arrivals lifted demand. Inflation held at 3.2% as pricier pork and power were offset by cheaper fuel and rice. Manufacturing improved, with PMI rebounding to 49.8 and May exports up 17% as producers front-loaded shipments during the 90-day tariff reprieve. FDI sentiment steadied with disbursements, hit USD 2.2 billion, and new registration doubled month on month. Our talks with industrial park firms pointed out that site visits have largely returned to pre-tariff announcement levels following a brief 2 to 3 week lull. Internally, the government continued to push spending with state disbursements increased by 17.5% year over year. The 67 billion USD high-speed railway projects have received proposals from 2 local investors and assessment is underway. Vietnam's stock market rebounded sharply in May. The VN index delivered a 9.1% total return as trade talks with Washington warmed and US-China frictions eased, lifting risk appetite. At home, Politburo Resolution 68, highlighting private sector growth, further boosted confidence. Average daily turnover was 30% higher than Q1 average to $835 million. While foreigners turned modest net buyers with $19 million in inflows. Real estate led gains, jumping 28.7% on hopes for state-backed infrastructure and a recovery of industrial park stocks, accounting for almost half of May's index advance. Financials was second-led, added to 4.2%, spotlighting Techcombank amid plans to list its brokerage arm. Industrials climbed 10.9% in line with the broader market. Year to date, the VN index rose 3.7%, with Vingroup-related companies contributing 7.5% to the gain. The group of companies together made up 13.3% of the index's market capitalization, and all posted strong performances year to date. The portfolio NAV rose 6.7% in May, lagging the FTSE Vietnam Index's 12.7% advance. Year to date, the portfolio is down 0.8%, while the reference has gained 15.8%. The performance gap is because of the rally of Vingroup-related stocks, which represent roughly 25% of the FTSE Vietnam Index and 13.3% of the VN Index, yet we only have position in its residential real estate arm. We remain underweight because of the group's high leverage, continued EV segment losses of USD 3.2 billion in 2024, which was 28% more than the previous year, and a complex web of cross-ownership among subsidiaries. Despite lingering uncertainty, our outlook is constructive. Vietnam-US talks are progressing, Washington and Beijing are easing tariffs, and a softer US dollar is beginning to channel capital toward emerging markets. Vietnam's fundamentals remain resilient. EPS for the top 100 companies is expected to grow 14.7%, and the market trades at an undemanding 2025 FPE of 11.7 times. While retail activity, 80% of turnover, can fuel short-term swings, we expect money to gravitate toward firms with healthy balance sheets and consistent earnings growth.